Investors have been following the titans of the tech industry this week as they reported their quarterly earnings. Perhaps the most highly anticipated results were those from Apple, with many wondering about the performance of its new iPhone X. The answer? iPhone sales were disappointing, with 1 million fewer sold than a year earlier. Total sales stood at 77 million phones for the quarter.
People were slightly disappointed about the levels of sales of the iPhone X or iPhone 10, whatever you want to call it, and they're now concerned that maybe we've reached peak device or something like that. And I think probably the truth is that not everybody wants to spend $1,000 on a phone.
The high price tag, however, seems to be making up for fewer sales. Apple's revenues rose 13% to $88 billion in the final 3 months of last year, and profit climbed to a new record of $20 billion. For Amazon, the last quarter has been a prime season. The world's largest online retailer added millions of new customers to its Prime membership club. Revenues for Amazon rose 38% to more than $60 billion, beating analysts' expectations. And its quarterly profits soared past $1 billion for the first time, doubling to nearly $2 billion compared to a year earlier.
Obviously, profits are something new for Amazon. It's historically grown by reinvesting most of its money back into the business, and so it's early days as far as it is a profit-going or an ongoing profit-making concern.
One company going the other way is Google parent Alphabet. Once the hottest tech company on the block, its results fell short of expectations. One reason is the $11 billion it set aside to pay taxes, including those on repatriated profits. It did see growing revenues of $32 billion, with Google being its main driver, but Alphabet reported a $3 billion loss in the fourth quarter. And Facebook is suffering as more Americans log off. While ad revenues and the number of users grew, the company's daily active users in the US has declined for the first time. The social media network also revealed that users spent 50 million fewer hours each day on the site compared to a year ago. The tech giant still announced 48% growth in revenues over the previous year's fourth quarter. The company took in $13 billion and reported a rise in profits to $4.3 billion. Record earnings from some companies such as Amazon may ease some tech investors' concerns, but others may now worry whether companies like Facebook will keep delivering higher stock prices. Kerry Alexandra, TRT World.
OK, let's go straight to our guests. Our editor-at-large, Craig Kapitas, joins us from Paris. But first, let's turn to Santosh Rao in New York. He's head of research at Manhattan Venture Partners. It's a research-driven merchant bank focused on the secondary market for late-stage pre-IPO companies. Thanks so much for joining us, both of you. Now, these are big results, but are they getting too big? Are they too dominant and even a threat to innovation? George Soros seems to think so. He actually thinks their days are numbered. So my first question to you, Mr. Rao, what do you think? Are they too big and too dominant?
No, absolutely not. Thanks for having me. I think none of the stories are broken. At this point, I think this is a healthy pause, I would say. People need to step back and see that these companies are valued for perfection. Sometimes even a minor correction here or there or minor miss here or there causes panic. But I don't think there is reason to panic. Every company is executing on their own niche markets. The story is not broken, as I said. But I think people need to reset their expectations. They need to see that there are some risks at this level. They need to reevaluate the stuff. But I think overall, the companies are still executing. Everything's are go. All systems are go for all these companies. OK,
so all systems go for you. And what about you, Craig? How do you see them? Too big, too dominant?
I think the question has to be asked, and I think it has to be asked very seriously. You know, in the avalanche of numbers and statistics released today, the most significant one orbits around the expression short of expectations. Now, buried in all this stuff, the market was clearly not pleased with Apple's 2018 Q1 expectations, which is forecast between $60 and $62 billion in profits. Now, hold on a minute. That is greed garnished with hubris. How much money, how much profit is enough to sate the market's appetite? That is a legitimate question. How big does the world want Apple, Amazon, Google, and the rest of these tech companies to be?
Good question,
and
but
no
who's
one's
worried?
asking that question.
How big should they get? To you, Mr. Rao.
Yeah, I think, you know, what's happening is these companies are growing because there is demand for their products. They're not just growing without any reason. There's a structural change going on. There's a secular change going on. Smartphones are coming into market, or new smartphones are selling in the emerging markets. A number of people still don't have smartphones yet there. So there is penetration to be had there. Yes, there is some maturation here in the developed world, but I think overall, there's a long way to go. There are some issues, like I said, the market needs to pause. The ASPs are up, but the price points are high. iPhones are declining for Apple. In the case of Amazon, it's great, but there are some cost issues because they need to go into the retail markets. They want to go into the brick and mortar. So there are some minor structural issues overall. But I think on a secular basis, even Google, yes, there's competition coming from Amazon on the advertising side, but overall, they're executing as well. They need to pause. They need to correct a few things, but I think overall there is demand. They're growing as a function of the demand out there.
Okay. Now, you mentioned Amazon. So Jeff Bezos, the Amazon founder, of course, he's overtaken Bill Gates now, and he's the richest man in the world, on track to be the world's first trillionaire. Should we be worried about his wealth and just how fast Amazon is growing? I'll put that to you first, Mr. Rao.
No, I don't think so. I mean, that's just, those numbers move around. And I don't think Jeff Bezos is worried about that or counting on that. So that just grows. But what he's doing is providing a great service. I mean, he's changed our way of life. He deserves to be rich. He deserves to be rewarded. So I think that's not an issue. I think overall the market's not going to take that into account. He will continue to grow, like I said. It's going to be disruptive. But overall, I think brick and mortar sales are still going to be there. Even after the dust settles, they say that about 49% of sales are still going to be on the brick and mortar side. So he's going to move into the retail market, the brick and mortar side. So there's some challenges ahead as well. So let's see where that goes. But the valuation, the ownership, what are the richness and all that, that fluctuates with time.
And Craig, does the wealth of tech titans worry you?
Well, I think people have an illusion that the growth of these tech companies is good for commerce. So far, it's mainly been good commerce for crony corporations, creating fragility and a kind of winner-take-all mentality. And the reason I point that out, and the reason why this is important, particularly this weekend, Super Bowl weekend, this was the weekend years ago that Apple ran its famous 1984 Orwellian commercial, when a woman came into a room and threw the hammer essentially at IBM and said, the old way is out, we're going to disrupt, we're going to be fair. And what this is, by every indication, these companies are turning into what they promised the world, their consumers, that they would not become. Now, whether that's nature's way or not, I don't know. And it's a very good point my colleague is making. Excellent point. People continue to buy the products, and that's what makes them powerful.
Exactly. And the consumers don't seem to be worried about their growth, so there doesn't seem to be that much worry coming from them at all. Now, I want to move you...
No, I think that's the new...
the worry...
Sorry, let me put that question actually to you, Mr. Rao. That was my statement, but I put that as a question.
You know,
Go ahead.
No, I don't think they should worry about that. I don't know what the issue is right now, but I think overall that's the way of life. It's a new millennial generation. We have to move with the times. We cannot stay with the old times. You just have to roll with the punches, like they say. So I think these companies are giving you what you want. They're improving your life. They're changing productivity. So I think there is... net positive effect of all these companies. Yes, there's regulation that needs to come in. They are stretching the boundaries. There need to be some guardrails put around them. Yes, I agree with that. And that's a risk factor for all of them, the monopoly part of it. So I think that all that will come in. But I think overall, you cannot deny that what they're doing is really changing the way we live, and they are benefiting us.
OK, I want to talk about Facebook now, because it appears to be possibly on a downward spiral. I mean, can its luck continue? I know it's making money, but we've just heard that people are spending less time on it. I know I've personally removed the app from my phone, and a lot of people are. I'll put that to you first, Craig.
Well, you know, Facebook, I think, is one of those products that has a sell-by date. People are always going to use it. It's always going to be there. It's going to make a lot of money, but Facebook never lived up to its full potential. It will continue to make money like Microsoft makes money, servicing a core group of people. But I don't see any new killer apps coming out of Mr. Zuckerberg. Where you're going to see those killer apps is coming out of Amazon and Apple. Apple has become the ironmonger of the 21st century. And this point about regulation is absolutely key, because we see attempts to claw back money, tax money. We see attempts to regulate these companies both in Europe and the United States. And unlike the big cartels of the past, Maria, these companies in many instances have more money for litigation than the governments are going after them for monopolistic tendencies. So any attempt to try and regulate these companies is going to take years, and it's going to cost millions upon millions in tax dollars to try and corral them in some way. So I do not believe at first blush that these governments can come in and create the kind of fix here to prevent the monopolies, again, that people seem to want.
OK. Anything to say on that point, Mr. Rao?
Yeah, Facebook, I think, again, there are some issues at the margins, but I think overall, between Facebook and Google, they have about 70 to 80% of the digital advertising market. With 2 billion people on board, I think you cannot deny their power. What they need to do is improvise, invent. There are a lot of levers they can still pull. They can get into wearables. They can get into music. There's some other things they can do on the side. But overall, they need to improve the stickiness, which they are doing. They need to manage the government's opposition to all their stuff, all the general opposition to what they're doing in terms of the fake accounts and all that. They need to fix all that. But overall, I think Facebook is very much, again, part of our lifestyle. They need to improve it and make it really efficient.
OK.
But they're not going anywhere.
They're not going anywhere. Good. So my question now, where do you see...
They're here to stay.
They're here to stay, indeed. Now, where would you see these big tech giants in the next 5 years? Craig?
I see them growing more powerful. Look at Apple's market cap is what, $860 billion? All they need is a 17% increase in their share price to become a $1 trillion company. It's about the same figure for Amazon. $1 trillion market cap? Do you know how much power that gives the company, particularly with the politicians who regulate them? That's what we have to be concerned about. These were the concerns at the turn of the 20th century when the government came in to regulate the railroads and the oil companies. They were getting way, way too powerful, and we're seeing the same thing happen here. But I suspect it was easier back then to bring in the regulations than it will be now, because there's just too much money and everyone wants to wet their beak.
OK, wet their beak indeed. And Mr. Rao, where do you see these big tech giants in the next 5 years?
Yes, I think they are very much going to be around, but they will be slightly different from what they are. I think you will see Apple move away more and more from the hardware and get into services. You're going to see autonomous cars. They're going to get into televisions. So they're going to be more a wider company than just hardware iPhone sales. Facebook is going to be much bigger than what they are. They will probably get into their own programming, video, and there's a lot more growth to be had. bad, and they're going to be much wider than what they are. Same thing with Amazon. They're going to have their foot in both the retail and e-commerce. So you're going to see a different side, more diversified, more broader presence, and they will be much more disciplined and much more organized because they will be under watch. They will be too big, which they are already. So I think they will have to be careful to not get the monopolistic, the bad side of the monopolistic tendencies, so kind of control that. So all those issues are there, but it's their market share, their growth to lose. So they will continue on this track. There's no one to challenge them at this point.
All right, gentlemen, thanks so much for your insight and really appreciate your time. Thank you, Santosh Rao in New York and Craig Capitas in Paris.